What's up guys, Jake here, welcome back. In this video, we're going to do an update to my brokerage account challenge. In the event you haven't seen any of my prior videos, I will include the playlist down below so you can catch up. And it is me versus that total stock market index fund. I started the beginning of the year with $25,000 and I'm trying to double my account balance by swing trading and trading options. This video is current as of March 17th. This is day 51, trading day 51 of 252 for the year. And we are almost at the 1-year anniversary of the market bottoming out last year during the pandemic on March 23rd. So we're coming up real close to that 1-year anniversary next week. And over the last month, I think we bottomed out on March 4th, and we've had almost a green day every day for the S&P over the last 2 weeks. And once again, as we're coming up on this 1-year anniversary of the market bottoming out, there's a lot of rotation occurring of people that bought these growth stocks or these pandemic stay-at-home plays, and they're waiting for that long-term favorable capital gains tax rate. And maybe they want to sell their position and hold cash or switch to bonds, but more than likely they're just rotating from one sector of the market to another, holding their cash position or closing out their margin accounts or whatever they're doing. I just want to warn you guys that once again we're going to see volatility in certain sectors as some go down that were up last year, and the ones that were down last year are going to go up this year. For the last 5 weeks or so, the Dow Jones Industrial Average has outperformed the NASDAQ. Once again, all-time high today as the Fed announced they're going to stick to their low interest rates and monetary easing policies through 2023. I thought the market would go up a little bit more on this news, but it was pretty flat today. Additionally, as far as stimulus checks going out from the Recovery Act passed by Congress, about $242 billion, over 90 million checks has been sent out by the Treasury Department. But that isn't even half of what should be going out according to the allocations of $424 billion for direct payments. Additionally, all this other money, billions, hundreds of billions of dollars, is going out to state and local governments to help with recovery or to fight the pandemic. So how has the total stock market been performing? And year to date, it is up $2 or exactly 8%. And I am up a little over 5,000 or 20.83%. So I am crushing that index fund right now. Now, my goal was to double my money. I need to be honest with you guys, if I wanted to beat the index fund, I've already guaranteed it. All I have to do is buy the exact same fund as the total stock market index fund, and I will now basically mirror its performance, therefore beating it. So it wouldn't be a challenge if I just, dumped all my money, now that I'm up by 12%, dumped all my money into a total stock market ETF. I'm not going to do that. So I'm going to continue trading options, swing trading, active trading to once again outperform the market and hopefully double up and have a good account balance by the end of the year. These were my positions as of March 10th, my last update video. You can pause if you want to see exactly what funds I were in and how they were performing. And this is what it has changed to as of March 17th. The only stocks that I'm still holding are Costco, Apple, Walmart, and Johnson & Johnson. So just 4 companies. The rest right now are call contracts. I plan on getting back into selling puts later this week. I'm still feeling a bit over leveraged with all these call contracts, and we're going to discuss these today. So these are the additional ones. Once again, you can pause the video, but we're going to talk about them all generally in this video and what I think my game plan is going forward. First, let's talk about what I sold in the last week, and I sold my stock in FMC Corp. Once again, bought down here on this dip. It's then gone back up to this 110 range where it's been kind of consolidating over the last 6 months. Is FMC Corp still a good stock? Maybe, I don't know, but I was happy to get a profit of $181 off my cost basis, so maybe it's good, maybe it's not, past where it is now. With Home Depot, I bought a call contract, and I bought during this dip, the pessimism around March 4th. I thought that was an overreaction. Home Depot stock then shot back up to 280. I don't know if there's going to be a breakout. I don't know what Home Depot's resistance line is. It looks like it's around this 280, 285 number. If it goes above 290, then Home Depot is a buy, because Home Depot is a very well-rested stock that is probably due for a breakout at any time. But I don't know when that breakout's going to be, so I'm happy to exit my position at this time. If it ever goes below 260 again, that's another obvious swing in with buying the stock or buying a call contract. So my cost basis for this call contract was pretty expensive. I bought to open at $1,165 and I closed at basically $2,000. So my profit for over these last 2 weeks was $833. That is by far my best price movements, swing in, swing out. So yeah, I mean, call contracts, it's high risk, high reward. This easily could have gone the other direction if bad news broke and Home Depot just took a dive. But for now, I mean, I'm pretty happy with that swing. Last position I exited was Regions Financial, and this was actually a put contract. This is a nice uptrending stock. I almost wish I had a call contract on it, but I'm already in too many positions as it is. So I sold to open this put contract for $84. 2 weeks later, basically I closed it. I bought to close it, to exit it, for $20.65. So a nice profit of $63.70. Here's my Excel spreadsheet tracking all of my progress for the year so far. And just this one call contract on Home Depot basically was more than all my other sold puts, sold calls, and bought calls so far this year. So yeah, I mean, why has my account balance shot up so much in the last 2 weeks? It's because of the call contracts, which is very appealing. Once again, huge downside, but also huge upside if you're right. Real quick, I know people are curious about margin and how it works, and with Charles Schwab, I get a bill once a month. So over February, I was negative on my account cash balance, which means I'm on margin, and Charles Schwab is charging me that interest. So my bill for the month was $3.58, not too bad in my opinion. This one qualified dividend from Schwab was $6.69, so that covered my margin interest balance for the whole month. I've only added one position since my last video, and that was actually Huntington Ingalls. And I was actually in this stock earlier this year. I looked at their fundamentals, I liked it. I looked at their chart and was saying, hey, this is a well-rested stock. I think there was a dip here, and I said, hey, Huntington Ingalls is a buy. It then kept going down. It then went back up. I was above my cost basis, and I just wanted to get rid of it. I think I had been holding it over a month, and it hadn't done anything. And as soon as I sold it, this sucker started breaking out. So it's now in an uptrend with the 50, 20, 100, and 200 days lining up. So Huntington was due for this breakout, and I literally just exited it, days before it started showing promise. So I'm back in it, and I want to buy a call contract this time. If we look at Huntington's 5-year stock chart, we haven't recovered anywhere close to where the company was pre-pandemic. So prior to the pandemic, it was trading around 277. It then crashed real hard. It then looked like it was going to recover, and then it just kept going down around September. And I honestly think the pessimism was because this is a defense contractor, and it looked like Joe Biden and the Democrats were going to take power. But this is a false perception. We're not going to stop spending money on the military just because Joe Biden was elected president. And I think now that we're in the new year, 2021, people are starting to get that. So you look at Huntington, and since January 29th, it's up 25%. However, is it going to return to the pre-pandemic levels? When we look at their fundamentals, we can go to revenue and profit. We can see, their revenue. This is their trailing 12 months, strong increases. Huntington, I think, builds ships mostly for the Navy. Net income, their profitability, once again, very profitable company. Shares outstanding. They don't do a ton of share buybacks, but they're not issuing new stock, which is what I avoid. And when we look at price ratios, I always like looking at price to free cash flow. Free cash flow is basically money left over from operations to buy back stock, issue dividends, make acquisitions, reinvest in the company. And there's one skewed data point here which makes the chart look wonky. But their price to free cash flow is 10.86, and in the past this company has been valued around 15, 27, 19, 44, 19. So according to their price to free cash flow and their PE, they're currently undervalued. So I'm definitely bullish on Huntington Ingalls now, and I bought a call contract that I plan to hold probably for a couple months. So I bought a call contract with an expiration date of August 20th with the strike price of 220. So it's not even above 200, and it's got to get to 220 before it's in the money. And remember, it was trading around, I think, 277 prior to the pandemic. And my cost basis was $850. So you add $850 to $220, that's my break-even price. Once again, I think this stock is going to just start slowly trending up, recovering to where it was pre-pandemic. Yeah, I mean, once again, every $1 movement in share price is $100 in value added to the call contract. So this is a large position for me, but I'm feeling pretty optimistic about it. This goes for the other defense contractors as well. Once again, around the November election through January, I think there just was a perception that they weren't going to do as well the next 4 years, but their funding and their budgets are still pretty solid. Lockheed Martin was actually in a death cross since October, and it spiraled down hard. It looked like it bottomed out finally in February, and the price has ticked up huge the last couple days. But Lockheed Martin is pretty close to being back in an uptrend, and once again, it's down huge from its pre-pandemic levels. If Lockheed Martin's price gets above its 200-day moving average, then I think this stock will also be due for an uptrend, and I'll probably buy a call contract on this company as well. So let's review all the call contracts that I've purchased, and there's basically two different types. There's Costco, Apple, Walmart, Dollar General, Target, and Verizon, where their stock is currently down, and I think it will go up. I'm basically making a bet that the stock won't just consolidate and trade sideways, which is a real concern. The other kinds of call contracts that I've bought are Allstate, Huntington Ingalls, Aflac, Synchrony Financial, and Bank of America. These are stocks already in an uptrend. They're not currently down from their pre-pandemic levels. So let's just look at the charts. You know, when you look at Bank of America, all four of their moving averages have lined up, and since November, it's been an uptrend, and it's very bullish. So I think I bought these call contracts a couple weeks ago, and I'm making more percentage-wise from the uptrending stocks than I am the currently down stocks. So I think, is it that simple that I just read the chart, I find a stock that's well rested, well consolidated, has good fundamentals, and is currently uptrending, and then I just buy a call contract to leverage my money? Here's Aflac. Once again, they had their Golden Cross event in November. It's on a bull run. All four moving averages are lining up nicely. Here's Allstate. Once again, all four moving averages have lined up again. It did stumble a little bit in February. And here's Synchrony Financial, which has probably been one of my best performing stocks on the year. I've swung in and out of this a couple times. And I'm being serious here. I'm reflecting on it. Am I overcomplicating this whole trading challenge? Is it as simple as find the dozen or so companies that their stock has been down or well rested, and wait for them to show on the chart? Wait for the four moving averages to line up that this stock is now in an uptrend. There are lots of large institutions that will not buy a stock until it does this, until the Golden Cross event occurs and the 50-day moving average is above the 200-day moving average. There are lots of people who only buy stocks because they're in an uptrend. And once again, am I overcomplicating things? And all I have to do is look for this you know, if I bought a call contract down here when everything lined up, it's already run up huge to 42. So there's very few times, you know, what's the downside here? What's the concern? And there's very few times that a stock goes up and then takes a 90-degree turn and immediately starts going down. When a stock has run up huge and it's starting to look overvalued, it often will then trade sideways for like a month. It'll consolidate as there's a new equilibrium between buyers and sellers. Buyers right now are exceeding the sellers, and they're not looking for the true value of the company. They're looking for how much can they get away with. How overpriced can they make these uptrending stocks look before the sellers break the equilibrium or break the unbalance and equalize the buyers. So what my plan here is with the uptrending stocks is hold them until they're about a month out, because that's when theta decay really erodes the value of the contract, the remaining extrinsic value. But if they just start trading sideways, then get rid of the call contract. If the bull run is over, if it's no longer going to uptrend for me, then I don't want it anymore. And for the stocks that are currently down, I really do need to have a goal. I need to set a price saying, if we get back to this price, it's probably not worth holding the call contract anymore. Yes, it could keep going up, or it could go back down, or it could trade sideways. So once again, these dates for all these call contracts that I'm holding are 30 days out, which is when I'm looking to get rid of them. And for the stocks that are down, I've set a price for myself of, hey, if it hits this number, I'm going to look at it real hard and think about exiting that position to potentially find a better one. And for the stocks in an uptrend, I'm just going to, hold on to them and hopefully they keep going up. I don't need to justify why. All of these companies I like their fundamentals, but it's the technicals that have taken over at this point. So I don't know. This might be my new game plan going forward for the rest of the year. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, if you have any comments or questions about anything happening in my videos, I know this has turned really heavy into options, and there's a lot of people that don't like the risk of options. Much riskier than just buying a stock or swing trading, for sure. But once again, I'm trying to move here. I'm trying to make money. So we'll see how this goes. It could end up blowing up in my face horribly. And if that happens, guys, I will document it for you. I will be completely transparent about all my trades. I'm not going to hide anything. Till the next video, take care.